is up, everybody? Jay Costa here. Welcome back to the channel. So today I'm going to go over my, I would say, biggest area of expertise, and that is the real estate market, the housing market. As both a real estate investor and a real estate agent, I wanted to share with you my thoughts on the current housing market, both on the macro scale, as well as my own local and anecdotal experience. I will also be going over the fundamental changes as well as the potential headwinds that we see in 2022 and share with you my advice to you if you're a current buyer in this market as well as a seller in this market. But first, before I get started, if you get any value out of this video at all, please smash that like button down below. Really helps me with YouTube's algorithm. Also, if you want to learn more about what we talk about on this channel, that is real estate investing, stock market investing, personal finance, just general entrepreneurship stuff, please feel free and consider to subscribe to the channel. Would greatly appreciate it. And now on to the video. I wanted to start off this video by simply stating the current housing market is not a healthy market. Home affordability is at its lowest level ever, with home buyers being priced out of this market every single day and being pushed into the rental market instead. And even though it's a super strong seller's market out there, both buyers and sellers' sentiment is at very low levels. So how could both buyers and sellers have such pessimism in the market when it's such a strong seller's market? Well, we already know about a lot of the headwinds for buyers, but there are headwinds for sellers going forward as well, and we'll talk about that in this video. But first, let's start out with what got us here, the pandemic market. In a reaction to the COVID pandemic that we all went through, the Federal Reserve in early 2020 slashed interest rates in order to keep the economy afloat while we were all staying at home. While staying home in their tiny apartments in the middle of major urban cities, the millennial generation finally realized the value in being a homeowner and having space and privacy. So they hit the real estate market, and they hit it hard. In fact, last year, 2021, 67% of first-time homebuyers were millennials. That's an all-time high. With interest rates being slashed and helping the purchasing power of buyers, as well as this newfound desire of the younger generation to find a home where they could work from home in and have space in, the housing inventory levels plummeted to all-time lows. Since supply could not even come close to keeping up with the demand, this sent prices skyrocketing, going up an average nationally of about 20% in each of the last 2 years. In addition, the older generations decided to mostly stay put because A, they didn't want strangers walking inside their home during a pandemic, and B, the prices skyrocketed so quickly, anything that they would move into would be more expensive than what they currently and already own. This has made the housing shortage problem that we're in even worse. So just build more homes, right? Well, it's not always that easy. As supply chain issues arose as we reopened the economy and inflation took hold, this added more costs and more delays to home builders, most of these costs being passed on to the consumer, the home buyer. But in 2022, there will be some major fundamental changes to the housing market. Number one, interest rates. With inflation hitting a 40-year high yet again, going up to the rate of 7.5% year over year, the Federal Reserve has absolutely no choice but to raise interest rates. We've already seen a bump in the mortgage market, with the 30-year conventional loan fixed rate mortgage going up over 4%. That's the first time it's been over 4% since early 2019. This is directly affecting the buyer's purchasing power. This was not unforeseen, as most forecasted a slower rise in housing prices in 2022 because of the weaker demand that was to be expected from the higher interest rates. And most in the general public believe that higher interest rates would actually decrease home prices, but that's not always necessarily the case. Robert Shiller of the famed Case-Shiller Housing Price Index states that there is not a tight fit between higher interest rates and declining home prices at all. This is especially true in inflationary times when asset values almost always go up. I see mortgage rates rising as absolutely necessary in this market. Demand outweighing supply has actually been an issue since I started being a real estate agent in 2015. So it predates the pandemic. But the all-time low interest rates, along with the surge in demand from the younger generations because of the pandemic, pushed the inventory levels to an extreme crisis mode. In my own anecdotal experience, the last few weeks, the rising interest rates have actually caused a slight jump in buyers' activity. Since most assume that rates are going to continue to rise from here, a lot of the buyers that were either on the fence or looking just got way more serious in regards to looking for a property. They want to lock something in now at the current rate before it goes up even more. I am assuming that this will be temporary, and as mortgage rates continue to rise as expected, the buyer demand will slow down. It will be very interesting to see what this market does and how much closer it can get to being balanced as we get to the second half of 2022. I expect the higher interest rates to subdue demand by a pretty good amount, and the second half of 2022 will be much slower than the first half of 2022, which we're already a third of the way through. Now, Zillow in December of 2021, only a couple months ago, forecasted the year of 2022 to have a national housing price increase of 11%. So here we are, mid-February of 2022, and they've already came out and said that that forecast is way off. It's going to be higher. It's going to be more like 16%. So why did Zillow change that forecast so quickly, only after 2 months of it being published? The expectations for tight market conditions to persist, with demand for housing exceeding the supply of available homes. So basically, inventory. Going by Zillow's forecast change, they, along with many others, including myself, thought that inventory was going to start picking up by now. But because the delta, the gap between the buyer's demand and the seller's supply is still so large, the inventory has not had a chance to catch up at all. Now, inventory levels are always pretty seasonal, and we will start to have a good amount of inventory coming into the market as we head into March. But buyer activity increases at that time as well. So I don't see inventory catching up or meeting demand anytime soon. Beyond pandemic-related reasons, we've had an inventory problem in this country, housing-wise, for quite a while now, and I don't see a way out. We've already seen that the baby boomer generation is not selling and downsizing from their homes like previous older generations have. As older generations have begun to live longer and retire later, it's become harder to get those older generation people to actually sell their house and downsize. In addition, their kids are staying in the home longer than they ever have. Back in the day, when kids used to be out of the house basically right after high school, the parents would look to sell and downsize into a smaller home in order to make their lifestyle easier as well as reduce living expenses. But now kids are staying in the home sometimes into the late 20s because of student loan debt as well as just extremely high housing prices. Now you add higher interest rates to this mix, and that older couple that's thinking about selling and downsizing is going to go out there, look what's on the market, and get sticker shock by not only the price, but also their monthly mortgage payment because of the higher interest rates. So a smaller home is going to be way more expensive per month than what they already live in now. So they say, screw it, I'll stay, which leads this ongoing housing shortage crisis into a vicious cycle. So basically nobody's happy. According to the Fannie Mae Home Purchase Sentiment Index, both buyers and sellers are pessimistic on the market, with buyers at an all-time low confidence level and sellers at a very low historically confidence level, albeit slightly higher than what it was pre-pandemic. Remember a year ago, we just went through the year of 2020, and everyone was complaining in the housing market about lack of inventory, that there was nothing for sale. Well, the amount of active listings for sale as of January 30th, 2021, a year ago, was around 619,000 homes. Now, as of January 30th, the same date this year, 2022, 2 weeks ago, that number is down to 438,000 active homes for sale. That is a 30% decrease in the last year. So what was already an extremely tight housing market on the inventory side just got way tighter. In my own market of Bergen County, New Jersey, suburbs right outside of Manhattan, New York City, we saw a very similar dip to the rest of the country. The amount of active homes for sale this time last year was about 3,500, and now it's dipped down to 2,600. That's a 25% decrease. We are seeing this all over the country, and that is why Zillow, among others, have changed their forecast on the year. You see, I make a lot of cold calls to homeowners in my area in order to prospect and farm a certain neighborhood in order to find listings and business. The number one question I get from these homeowners, if they're even remotely thinking about selling, is, if I sell, where would I go? So that is what the problem in this market is. Sellers are looking around in this environment and saying, if I sell my property, I have no place to move to. And even if I do have a place to move into, I'll have to pay more and pay a higher interest rate than what I already have. Then you add in the cost of everything else going up in regards to moving, like movers, finding labor, finding appliances that you may need in a new house, things like that. You almost don't blame them for not wanting to go through all of it and just staying put. So if you're a buyer in this current market, what should you do? Well, here are my suggestions. Number one, make sure you're the strongest possible buyer that you could be. That means talking to a lender, paying off all your credit cards and other loans that you may have outstanding. Save up as much as you possibly can for a down payment and lock in the best possible interest rate that you could find. Number two is to go direct. You should really take a page out of a realtor like mine's book and start going directly right to the sellers. If you're looking now, there's not going to be enough on the market for you to get a place without severely going way above asking price. So go right to the sellers. You should drive around the neighborhoods that you want to live in, write handwritten notes to the sellers and leave them in their mailbox. Or maybe you'll even catch them outside in their garage or in their driveway while you're driving through. Start a conversation with them. Make it personal. I did this myself, honestly, back in 2020 when I put my house on the market and was looking for a place to move into, and I wasn't finding anything. While I was driving through a neighborhood that me and my wife liked, we happened to stumble across a lady that was walking out to the front yard just by chance with a for sale by owner sign. After some negotiation back and forth, she never put it on the market. I was able to make an offer to her, save her some on commission, and 2 years later, almost 2 years later, here we are recording this video in that said home. So it can happen. So what should you do if you're a potential seller in this market? Well, here are my suggestions on that. I know it's really difficult to find something that's going to replace what you already have in your own home. You've made it exactly how you want. That takes a lot of time and a lot of effort. And you have memories in that home as well. The answer, frankly, can be a bit more tricky. If you aren't finding a good replacement for your current home, you may want to start looking into other areas. Here in New Jersey, most of the people, especially the older people that I help sell their property, they're moving out of state. They're moving to a place like Florida or a place like Pennsylvania. I know on the West Coast, California, a big relocation spot has been Texas or Nevada, the Las Vegas area, things like that. You may need to look into other areas, potentially also lower tax areas if you're coming from a higher tax state. Also, don't just consider square footage of the property, but also consider location and lifestyle. Just because you live in a 3,000 square foot single family house on a half acre of property out in the suburbs now doesn't mean you always have to. Doesn't mean your next property has to be exactly that. You can look at condos or townhouses in slightly more urban areas, because even though you won't get the same square footage, the same living space, you're going to have better walkability and proximity to, shopping and restaurants and things like that. And that may make the move worth it to you. That is it for today, guys. Thank you so much for watching. As always, let me know what you think in the comment section down below. Are you a buyer in this market who's currently struggling to find something? Are you a possible seller that wants to sell but has no place to move to? Let me know your story and let me know your feedback on what we've discussed in this video. Would love to answer any of your comments or questions. And until next time, guys.